Alright, so today guys, we're going to be going over my trading plan and exactly what I'm thinking, where I think it's going to go. Also, just observing. So, if we go back to the morning session, we had a huge manipulation. So, what I would like to do, so this was relative equal highs, so it'd be this one, this one, this one, this one, and then we finally broke through that. Now we have a little bit of a retracement. We go a little bit higher. We come back down to the first presenter fair value gap a couple days ago. And I really like how price reacts off of that. And then we send it higher. Now, what I would like to see is price to go higher. Pretty sure based on a 15-minute time frame. Okay, so I marked out this fair value gap right here, which I think we'll eventually want to reach to. We also have a new day opening gap. This was the high at 9:30. So I kind of want to do the same thing from 9:30 to 10 o'clock this morning. Mark out the highs and lows. So yeah, it'd be here. So we have 9:30 here, all the way to 10 o'clock here. So we have low right here, and then we have a high right here. And then we also have all these highs. So using that, we have the first presented fair value gap within this 30 minutes, which would be this one. This one and there. No, I'm wrong. Just kidding, guys. Okay, so we have 9:30 o'clock. Okay, so we're gonna use this one. Boom and boom, and we'll change it to green because it was to the upside. And I will be making a video explaining in technical what I do here so you guys can understand. So what I would like to see, if we think price is going to go higher to like these levels, I'm going to remove this one, is although it may fail here to keep on going higher, you know, what I like to do is wait until the 10 o'clock. Wait, and then obviously we wouldn't want to necessarily be buying here, but more down here, and eventually selling to these highs. But what I like to see is price use this as somewhat like support. But I'm still in the learning process, so over time, hopefully we can find out a strategy how we can use that. Okay, so now we're touching the new day opening gap. And what I want to see if this acts as a rejection and getting close to this, you know, like taking out these traders before we send it higher. I do like finding really close lows together. So this would be a low, that one, somewhat that one, but it doesn't have to. It does seem like we're in a buy program right now. You know, since the morning. Oops. We've had, you know, retracements, but overall we do have a bullish market trend, so to say. So I wouldn't necessarily want to be selling yet. We want to be patient. And let me tell you why. You wouldn't want to necessarily be swimming against the current, and the current right now is up. If we try to sell, it's more probability that we're gonna end up failing because we're overall going up so far. So we don't want to fight the current. And I'm telling you that because that's what I used to do. And most of the time I would be failing and wondering why. But so far, what I'm gonna do right now, just to observe, is mark out the fair value gaps. So right now, we're using this one. And overall, what I would want to be placing trades between a certain time. So every hour at the 50-minute, so 250, 150, 1250, and then every hour at the 10-minute mark. So that would be, 310, 210. So between those 20 minutes. So quickly, I'm gonna grab a pen, a piece of paper. I like to write it down only because I know from like school and all that when you write things down, it usually sticks in your head a lot faster, ingrains in your head. So what I think is gonna reach for is this 15-minute fair value gap. So right now we're in between the 350 to 310 macro. We've made a green fair value gap. I'm gonna make sure I use the right terminology for this because I don't want to fail or mislead people. Um, we've touched the new day opening gap. And let's say I think it's going to reach 15-minute fair value gap. So me personally, I wouldn't necessarily want to trade here because we're already at a premium level. Like people have already bought here, 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 and they're already up massively in profits. So if I were to be wanting to sell, it wouldn't necessarily be here, or not here, or buy. I wouldn't necessarily want to buy here because we've already moved a lot. So my objective for trading would want to be selling. So let's say we have like a range. Let's see the camera. The range is from my pen, the low, to my fingers, the high. And let's say the 50% is right here. I want to be selling either above premium, above 50%, or higher up here. That's the ideal probability that your trade is likely to work out. It doesn't mean that you can't buy here and sell there. But me personally, I've learned that I usually tend to not place good trades. Um, and if I want to be selling, same thing. I want to be buying below the 50% of the range or even below that. Let's see. So while this is all happening, we're looking at a 1 minute time frame. I will also show another video how I look through other time frames. So I have like another one. on my other monitor, and right now what we're reaching into is a 4-hour fair value gap. And on the 1 hour, so let me just mark it so it's not gonna be too exact. So 1 hour fair value gap would be around, oh shoot. So the first fair value gap on the 1 hour would be like around here. Something like that. So this one's a 15-minute. We do have 930 high. And the first fair value gap on the sell side is going to be this box right here. So it is possible that we reach here, but it doesn't have to happen today. But a really realistic one would be around here. And then we really would just want to observe what happens between this 20 minutes. And then here I also want to see if the new day opening gap reacts as like support. So it can go a little bit lower, but eventually the bodies of the candles stay up. So what I'm actually going to do is just place a trade based on this. So what I think is I'm going to place a trade using this. And my stop loss would want to be below that. And let's just say right here on that 15-minute. So I personally don't necessarily want to trade here, like immediately place a trade. I want to set my mind to a place where I think it's going to go to. And the reason I think it's going to go here is because it's a fair value gap. You know, just quickly touch it. We can take out these traders right here, you know, for sell stops or buy stops, I mean. Buy stops. Yeah, buy stops. And the reason I put my stop loss right here is because if we do take out this one, I think the overall trend is likely to go that way. But the reason I put my stop loss is, you know, I don't want to lose more money than I should. And the overall objective that I think it's going to go to is around up here. So right here, we really want to observe exactly what happens. So we got filled and we took a trade between the 20-minute macro. And now as a trader, you really want to study yourself and really feel what you feel. So if you're feeling nervous, you know, write that down. Why are you feeling nervous? Even if you're feeling confident, there's a reason why you feel confident. But don't necessarily live in that fear. You know, because that fear is what's ultimately gonna, you know, not let you pay attention to what's actually happening right now. Because I remember personally when I would take trades, you know, I would see red and I would automatically, you know, place myself in like worry and like, oh, what if this is not going to work out? But I've changed that to think more of, even if it does fail, that was a learning opportunity to sharpen up my trades. All right, so right now we're in the last minute of the 20-minute macro. And now what I'm also looking at is if the bodies of the candle close above. I'm gonna mark it out just so you guys can see. If they close above this, if the bodies of the candle stay below that, I think it's a little bit not going to be on our side. It's most likely going to go down from here. So this is a point in price and time where you really want to focus, pay attention. And also for any new traders that are trading, never walk away from your trades when you are in a trade. I know this sounds kind of like common sense, but I've walked away from trades and I come back without placing stop loss, and you regret that. We do have a relative equal low and low within, like, the it's not necessarily like a low all the way down here like these two, but it can still be used like the same. And then once again, we're also in that red box area where it's a potentially a sell zone. So we really want to study price, see how it reacts. Also what time. So I'm gonna write down, so we entered, I think it was 309, and touched old fair value gap. And it created I'm gonna say minus fair value gap, so a red. And price, bodies, and wicks are staying below it. Also, I'm gonna mark so it's close by a new day opening up. So here, if we really zoom these two black lines are a new day opening up. So you can see price went over it, went under it, and you see how we created this red. You can see the bodies of the candle stay kind of perfectly, and then the wicks, especially this wick stayed right here, right in the middle. And now we see that we're creating more of like a downtrend. So just like how I said before, we don't necessarily want to, immediately buy here. We want to use old fair value gaps. I don't necessarily know like order blocks and all that yet, but my main trade idea would be more of like fair value gaps that I think I'm going to be using. Right here, what I'm noticing is how the body of the candle touches that new day opening gap. And what I want, obviously as a buyer, what I would want to see is price pierce through this. The body's closing above up here. That would tell me as a trader that price wants to go higher. And then I'm going to move this one. So that was the old one. We also have created this one. From this candle's high right here. This candle's low. We can see the bodies of the candles staying below that 50%. So the reason I told myself that I wasn't going to place any trades, but I am going to be placing just 3 like sample trades just to see where I'm at and if like my ideas are correct, I guess, based on like what I've learned. But after the 3 trades, if they fail, I'm not going to want to go open a Top Step account and start my funded trading or my evaluation. Based on like this is all fake money, so as a beginning trader, I wouldn't recommend, based on my personal experience, you usually just end up losing money. So for me personally, I think it's okay to place some fake trades just to see where you're at and just to test the waters and see how you feel during those, the moments when you're in profit or when you're in, losing money. The main objective would be to really control how you feel during the trades. It's really good like when you see you're in profit. It's a good feeling, but you don't want to let those feelings, control your head. These emotions will definitely not make you learn, in my personal opinion. So instead of having emotions control you, you control your own emotions. Because for me, I would get, let's say I would win the trade and it worked out exactly how I said it was gonna do. Most of the time, I would get greedy. And then I would place another trade saying, like, I know what I'm doing. Let's keep on doing it. And usually that second, third trade would just make me lose all my other, my profits. And what I'm trying to teach new traders and traders that are trying to find their own model is to just place a couple trades if you do feel like you're ready to place trades. And let's say you win, to set a clear profit every single day. That's the same exact number so that you don't overtrade or revenge trade. So for me, it would more be like, for my take profit, it would be $300. So I think it's going to go ultimately up here, but let's say it doesn't. My ideal take profit would be $300. because that's not necessarily like, a huge move. But for me personally, $300 would be more than enough. I'm not necessarily going for like, what you see like on reels or like YouTube videos, like 5, 10, $20,000 trades. For me personally, it's just too much and unrealistic. I'd rather go for very small moves that are more probability. And also, I don't want to have myself be sitting in the charts for like 5+ hours. It's just too much for me. So as we're heading towards more over here, we can move our stop loss. For me, I'd probably want to put it in the body right here. Just so even if we get stopped out, we're already in profit. So either way, we're not losing money. And looks like, all right, so we got our take profit hit, which would be at 324. So from 309 to 324, it took 15 minutes to reach my target. So now you can see exactly, okay, and it did end up reaching into the 15-minute fair value gap. And even though I missed out on $100, my personal, target is 300. And the main reason is because I personally don't want to get too greedy, thinking like, oh, if you can go 400, you can go 500, and then more and more and more and more. I just want to have a simple, clean trade where, like in this case, it only took 15 minutes for 300. And most of the time, what I find out is when I put a take profit that's too high, it usually doesn't end up reaching there. And like the trade ends up like reversing on me, and then I get stopped out. So when you're in profit, don't feel bad about taking the profit. I know you want to make a lot more money, but it's better to have small wins over time. Just like how you're hitting the gym. You don't want to go just full force just one day so the next day you can't. Rather, use lightweight, use good form, and over time, you're going to be able to use more higher weight. And then eventually, just like this example for $300, we're going to be able to do that every single day, learn our mistakes. In this case, we didn't necessarily have a mistake. But over time, we're going to be able to say, okay, now that I know I can hit 300, now I can hit, I don't know, like 5, 6, eventually to a lot longer runs. So I like to compare, trading as to the gym. Over time, you don't see the results in a week. You don't see them in a month. But then eventually you start seeing the compounding effect of doing like a little bit every single day. And then you look back in a couple months and you'll be like, dang, I'm still skinny right now, But over time, you start seeing the results. Okay, so right here was a 15-minute fair value gap. We got close to the 50%, which is consequent encroachment of that. But you see how the bodies of the candle stay below it. So right here, we really want to study exactly if it does want to go higher. That's great. You can note that, like we sold. All right, so I'm going to put, we sold at our profit target at 300. It went to our thinking at the minus fair value gap 15-minute chart. So it reached close to 50% of that. And then we're going to also note bodies of the candle closed below it, below minus fair value gap. So that's so far that's what's occurring right now. Just so I can explain it again. So we're gonna remove this. So we did have a fair value gap here, sell side, and then we also created one here. But overall, I wasn't letting this, because a lot of traders would think, it's sell off. More importantly, because the bodies of the candle and the wicks are reacting off, and we think it's going lower. But overall, the main objective is up here. So when I'm trading, I'm not necessarily letting all this, think that it's gonna go lower, because this idea is more powerful, let's say, in my head. So I'm not letting all this affect me, but I know that we're in a buy program since the morning. We see that the market's going, we're in a buy program right now. We're going up. It's an uptrend. What the heck? My mouse is acting all weird. But I'm just gonna mark them out so you guys can have an idea what I'm trying to say. So we had this one. We're gonna change it to green, I mean. So we have this one, and you see that the bodies of the candles are staying above the 50%. The wicks do go a little bit lower, but the bodies is what's telling us what's gonna occur. It's more likely it's gonna go higher. So we have that one. We have multiple entries, and then we have this one specifically right at 250, and you see the wick go right back into that, and that's where we have this reaction up. So that's why me personally, I want to be entering in this 20-minute macro. And then if we move this one, so I'm gonna go, so we had this one, and then we also have this one right here, very small one, but you see how also this candle reacted very strongly. I'm just gonna remove that one. So overall, we have a lot of fair value gaps that are, positive green, buy side. They're working. And then we also had this one, which is the one that I was using. So we didn't enter here. Pretty sure we entered right around here. So like 308, 309. We entered there, and the reason I entered there is because it's an old fair value gap, and I think it's going to use it as support. And we had 1, 2, 3, 4. And then, yes, so the overall thing that I'm trying to say is you try to find places where you think the market is likely to go, and at the same time finding an entry where it's more probable that it's going to react there. Like instead of buying like here, which I was going to do, because most traders are going to see, oh, it's green right now, it's going to go higher. But no, what usually happens is it uses old fair value gaps, order blocks, all that good stuff that I can't really explain right now since I'm still learning. But the thing that I did at least know is that it's going to use this old fair value gap and probably reach up here, which it did end up working in our favor.